So Disney stock is at a big time low right now. Now, why is that? Is it just because Ron DeSantis? Is it because of all the wokeness going on?
Agree to disagree.
Or is there something else going on? Well, I'd rather travel back to a time when there actually was a magical kingdom, right? A time when Disney was actually profiting, especially off of one particular strategy that the wealthy use, that they're still using to this day, which I want to talk about that in this video right here. Welcome to Money Ripples, Chris Miles. Let's get serious, all goofy aside. Get it?
That's good, Noel.
That's what happens when you're a father of 8. You got the crappiest dad jokes ever. Now we're moving on. Let's get right to Disney. What's going on with Disney right now? Why is their stock tanking? So here's one video set up by Fox specifically, talking about one of the critics of Disney, giving their reason why.
Disney is on a woke path to ruin. Even Snow White's actress hates her own story. Carol Markowitz wrote that, and she joins me now. Carol, it seems to be catching up not only with their customer base, but also with investors, because it is on a bad run right now, Disney.
Yeah, that's right. I mean, they've lost 500 million in the most recent quarter. Their stock is at, basically an all-time low. And I think that they don't care. I think that Disney has decided that it's going to push an ideological viewpoint and their profits be damned. I don't know what their stockholders think of that, but that's what I think is going on within the company. They've been ideologically captured and they have an agenda to push and they're going to push it.
All right, so that's one viewpoint. She's saying the wokeness is the problem, right? Like even Snow White actress is like, I'm out of here. This is ridiculous. And it's killing profits. All right, let's get another take on this. Let's see what they have to say about Disney stock.
Disney is down almost 60% from its all-time highs, which is leaving many investors asking if the stock is looking cheap today and if this is an opportunity to buy it. This covers Disney's different segments of the business and its revenue and operating income that the different segments produce. So we can see here that the Disney Media and Entertainment Distribution actually saw its revenue decline by about 1% year over year for the third quarter. And in the 9 months ended July 1st, the revenue is up by about 1%. So Disney Media and Entertainment Distribution are basically not really growing year over year as a whole segment of the business. So where Disney's growth is coming from right now is from its Disney parks, experiences, and products, which did see about 13% year over year revenue growth.
So in other words, their movies and their shows kind of suck lately, right? There's no mystery there. So they're spending money on that. They're not really making money. They're actually losing money on their media, but their Disney parks, people are going to Disney World and Disneyland. That's where all the money's being made. So even though they're growing a little bit, it's only because of the theme parks, not because of their entertainment industry. They're really just using their theme parks to help pay for the media and the entertainment business.
This next screenshot shows us where the growth to Disney's parks business is coming from. And it is coming from the international segment, which did produce about $1.5 billion in revenue, which was up 94% year over year. And this is where the most revenue growth for the business came from. We can also see that the operating income for international did grow by about $500 million year over year.
To really summarize this video that he said here, revenue, it's going up, but profits, not so much, which is why their CEO is saying we got to get tighter. We got to get leaner. We got to make sure we're being efficient with everything that we're doing. And he's trying to paint this picture of a great future. The problem is that they're looking at the numbers saying, yes, but your subscribers aren't growing because, their height was back in 2020. Well, we were all locked down, stay at home, right? Of course, subscribers were going up like crazy, and everything that was streaming, even Netflix, even deal with Hulu. We're talking about all these other channels, even like Paramount and NBC, Peacock, all that kind of stuff, right? They were all booming with subscribers, but we are now no longer locked down. People have kind of settled down a little bit. All the hype about subscription media being all the rage in 2020 is no longer the case. It's like this, guys, like when people buy stocks, stock prices go up because they think there's a brighter future. The CEO is trying to paint a brighter future, yet they're not seeing the results. So therefore the stock just keeps going down, 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 down. Right? Because it looks like it's a sinking ship. It doesn't help that there's negative media attention, talking about the wokeness, talking about DeSantis and their the hissy fits that they're having together and they're in Florida and all that kind of stuff going on, right? It doesn't help at all. And so Disney's, their character, their reputation, everything's getting tanked because this is all happening. So they're losing reputation and they're losing money. That's a double whammy right there. That's a big no-no.
Sit on a dwarf? No!
It kind of makes you wonder, What would Walt Disney be thinking about this in this case? I mean, would he be turning over in his grave? I mean, would he be in favor of this, or would he be saying, we need to take this by the reins and do something different?
Different things.
Now, he's famous for a lot of things, and he's definitely famous, by the way, for spending a lot of money. They were not always profitable. In fact, very rarely were they profitable. But because he was such an Imagineer, right? He was such a visionary, he was able to create more and more money and more profits. Now, what many people don't realize, unless you watch some documentaries, is that Walt Disney had some financing issues. He had a hard time getting money to be able to buy the land in Orlando, which he was trying to do secretly. He's trying to buy up all this swamp land out there. But he was having a hard time doing it. And so he went to the bank and said, well, will you give me money to buy this crappy little swamp land barely even called Orlando back then. It was outside of Orlando, right? And they said, well, no, not unless you put up some of your own money. So he said, you know what? I think I got the answer. And that's exactly what we'll talk about today. What was that answer? What did he actually do? The banks would finally say, yes, we will now step in, and the rest is history.
History.
That answer is infinite banking. That's what he did. For example, in the Disney sourcebook quotes from Walt saying, quote, I could never convince the financiers that Disneyland was feasible because dreams offer too little collateral, right? In other words, dreams don't pay the bills, is what they were saying, the banks were.
Money is money.
The sourcebook also goes on to say, quote, unfettered Walt borrowed against his life insurance and sold his second house just so he could develop his idea to the point where he could show others what he had in his mind. Studio employees worked on the project paid for Walt Disney's personal funds, end quote. Right there, from their own words, they said he used his life insurance, not dying. He didn't die, obviously. Well, okay, he's dead now, but he didn't die to get the money paid. He used the cash that was in his policy, plus he even sold his own home to have enough capital, enough collateral for the banks to say, all right, we're in. He essentially, what he did is he funded his dreams, didn't he? He banked. They literally banked on his own personal infinite banking bank. Speaking of infinite banking, you can actually schedule a call with us to set up your own infinite banking policy, see how those numbers really work for you, and create passive income right now. Click on the link in the description below. All right, so here's how this infinite banking thing works, right? And I'm going to tie this into how Disney did it as well, even though his was a little bit different. So most people, what they do is they have their money, right? They're going to take their money and they put it into this whole life insurance policy. Now, it does buy a death benefit. So you get a little bit that buys that, but then you get the rest of it that's going into this tax-free savings account, right? This cash value, as they call it. That's where the money is. That's the part that the companies, the banks, actually love lending. So now this money is accessible. You can access this money whenever you want. You can generally get to about 95% of it at any time. The problem is most people that just set these up with insurance agents, like your typical Jake from State Farm with his khaki pants and polo shirt, you try to buy it from him, it's going to be so much that money is instead going to go here. We don't want that. That's bad, right? We don't want all that money going to that death benefit. We want more going into this. This is where the money you get to while you're alive. So we get this money in here, and what happens next is that then you can do one of two things. You can withdraw the money out, or you borrow the money. You can borrow it from the insurance company, or you can even borrow it from the bank where they use this as collateral. So instead, we're going to talk about the loan part of it, right? You get a loan. Now, the cash is still in here, right? Let's just say that, for example, you've got $100,000 in here at this point that you've built up. The cash stays there. But if you want to borrow, let's just say you want to borrow $75,000. Well, normally if you just pulled out $75,000 from your bank account, now you're not earning as much interest in your bank account anymore, are you? Because now the money's out. But in this case, you're still earning tax-free compounding interest, usually like at least 5 or 6% a year. Well, this $75,000 you can now use however you want. So just like in Walt Disney's case, he used that $75,000 or more in his case by closer into the millions. He's using that and using that money to invest into whatever it is, hopefully making you bigger money. So you're able to invest with it. Same thing also worked for one of my clients. Let me show you an example of that. Now this client in particular, he was actually a chiropractor out in Minnesota. He had $300,000 in his account. He said, Chris, I want to buy a building for my practice, but the only money I really have is this money right here. I'm thinking about just canceling my policy, cashing all that money out, and using that to invest. And I said, hold on now, Sparky. Before you just go and do that, let's instead go talk to your local credit union and see about leveraging this by using this as collateral for them to give you a better loan. So he goes talks to the credit union and he says, listen, if I buy a building and I have to, have some extra money to build it out, and I put up this cash as collateral, will you give me a loan? And they said, oh, heck yeah. If you're giving us a building as collateral and we get this cash as loan, that's like double collateral. We won't only give you a mortgage on this, but we'll reduce your rate to almost zero. Like it was like dirt cheap, nothing percent that he got. So he got a much better rate, about 2% less than the going rate at the time, that he was able to get out. So he went and he got that money, built out his building. Here's my amazing artwork. That is a building. That's what it looked like. It was that awesome. $375,000 of beauty right there. So he went, got the building all done. He even got a renter in here. So he got a renter to pay his mortgage payment for him. So he's living and working in his office rent-free. And then guess what he did? He went back to the bank. He went right back to them and said, listen, can I take the lien off of this? Can we take that money off of that and just use the building as the collateral? And the bank said, yes, absolutely. In fact, we'll not only take the lien off, but we'll keep the interest rate the same. So guys, he got a better interest rate just because he used his own personal bank to give him better terms, where he got a dirt cheap payment that now the renters pay for. So he's now in here rent-free, paying zero, right? And now he's got this $300,000 he can go and invest again to do whatever to make more and more money. All right, now you got just some of the basics of infinite banking. We got a whole series of videos on infinite banking you can check out right here.
It's no secret that Disney is tanking, and stock is tanking right now, whether it's due to wokeness or the fact that their subscribers aren't really making them a lot of money. Their movies kind of suck lately. Either way, Disney is sucking. But it wasn't always that way. Back in the day of Walt Disney, he used infinite banking to actually allow him to use this strategy like many wealthy have done it, and even people like us can use today to help create more money right away. In fact, if you've ever been to Disney World, you wouldn't have been there had it not been for him using this strategy.